Here's a question. Why 2/3 of households in New York City rent and only 1/3 own their home? According to the official New York City website, as of 2017, New York City had almost 3.5 million total housing units. Out of these units, a little over 1 million are owner-occupied and almost 2.2 million are renter-occupied. Looking at the more recent US Census data, owner-occupied housing units in New York City are only 33.2%. Now take a look at the state of New York. That's New York State, and this is New York City. But what's more interesting is despite New York City being a tiny portion of the state, approximately 40% of the state's population resides here. Out of 19.6 million people in New York State, 8.3 million live in New York City. This makes the homeownership rate of New York State the lowest in the nation, at 55.4%, followed by California. If you're wondering which one is the highest, it's West Virginia, according to 2021 US Census Bureau data. So the question is, why the homeownership rate in New York City is so low? The simplest answer that anyone can give is because New York City is expensive. And that's correct. But saying it's expensive doesn't really explain a lot and is definitely not the only reason. So it's time to learn why so many people in New York City don't own their home and instead they choose to rent. And why buying a home in New York City would not be a smart financial decision for the majority of people watching this video. Before we start, it's very important to mention that videos like this contain a lot of generalization, and it's impossible to advise a broad audience in a form of a YouTube video. There's a lot of misleading content on every platform telling you that renting is automatically a waste of money and trying to make you believe that buying is the right choice for everyone in every situation, which is absolutely not true. This kind of advice, whether or not buying a home is the right decision, needs to be personalized, considering your current financial situation and your long-term goals, which includes your career plans, retirement plans, and so on. The goal of this video is to give you a general understanding of the situation and point out certain factors to think about. Of course, there is no one best approach for every situation, and there are definitely reasons why the other 1/3 of households decided to buy their home instead of renting it. Also, as a side note, I'm a full-time real estate agent based here in New York City. So if you would like to discuss your personal situation and your options, there is a link in the description of this video where you can schedule your free 30-minute one-on-one consultation call with me. Alright, let's get to the video. So the first obvious reason why people don't buy in New York City is because it's expensive. But let's talk about the details of this reason. So three major components are your purchase price, closing costs, and carrying costs. There are two ways to go about the purchase price. You can pay all cash, or you can put a certain percentage as a down payment and finance the rest. The median sale price in New York City is $765,000 and $1.175 million in Manhattan, which is this tiny island that no one knows about. Now let's compare that to the median sale price in the US, which is $412,000. But the problem is not only a high purchase price, but down payment requirements are also higher here. Two main types of properties you see in New York City are co-ops and condos. You probably heard the term condo before, and if you're new to my channel and have no idea what a co-op is, just watch this video. In both types of buildings, you live in an apartment and share all common areas of the building with other residents. What's different between those two is the ownership structure. So, the majority of co-ops would want to see at least 20% down payment. There are a few co-ops in the city that allow 10% down payment, but I haven't seen anything lower than that. Some co-ops might require as high as 50 or 60% down payment. On top of it, even if you have that much money, it's still not enough, because co-ops also want to see a good amount of post-closing reserves, which is basically the money left over after you pay your down payment and closing costs in order for them to approve your purchase. The requirements vary from building to building, but the point is co-ops most of the time won't approve your purchase if you try to spend all your money to buy an apartment in that building. They also have more strict debt to income ratio requirements compared to the lenders who are ready to give you a mortgage. For condos, you should be able to finance 90% if you want to put only 10% down. But the challenge here is condos are generally more expensive compared to the same type of apartment in a co-op building. So almost always you have to increase your purchase price in order to find a similar type of apartment in a condo building. But then financing 90% of your purchase price will result in high mortgage payments. Plus, you also have to pay your property taxes, insurance, and common charges, which outside of New York City is known as HOA, your homeowners association fees. So buying in New York City requires careful planning, because if you're not qualified, you most likely won't be approved to buy a co-op, and if you end up buying a condo, make sure you don't become house poor, which is a term that refers to a person who spends the majority of their income on their housing payments, leaving little to no money left over for savings or paying other bills, and this can result in accumulating more debt. The third component, closing costs, is also a big deal because transactions in New York City are not cheap. This includes mortgage recording tax for condos and houses, mansion tax for properties above $1 million, your loan origination fees, appraisal fee, attorney fee, building closing costs for condos and co-ops, and more. I already have a full breakdown of closing costs for buyers in New York City. The link is in the description below just in case you want to learn more. So to summarize this point, compared to other states and cities where the purchase price is lower, you can get your home with 3.5% down FHA or 3% down conventional loan. It's hard to be qualified to buy in New York City without substantial savings. And not only for people who have entry-level jobs, but also for a lot of established professionals who just don't earn as much to be able to save enough to afford a home in their desired neighborhoods. Next, even if one has enough money to buy, the second problem of owning a home is financial liquidity. The money, whether you're paying all cash or putting a down payment, can be invested elsewhere. As a renter, you don't have to pay excessive closing costs and tie up your funds in a down payment or purchase price. Depending on where you are in your career journey and how much risk you're willing to take, the money can be used for stocks or other investments that can potentially give you better returns, or you can invest in your education and get a degree which will help you increase your income. The other option can be to start a business that has the potential to grow and generate you more income than the appreciation of your home. Tying up your money in a property comes with opportunity cost, which is the value of the second best option you're giving up to pursue your dream of owning a home. Basically, the benefits you could have received if you chose to use your money on the second best option available instead of buying a home. This is the reason that even a lot of high-profile people choose to rent and use the money in their business to generate more income. New York City is a place with tremendous opportunities, and every year thousands of people with big dreams from diverse backgrounds come to the city hoping to make those dreams come true. Here things are different, and not everyone sees homeownership as a necessity or a mark of success. And for a lot of those individuals, tying up their cash in a home can actually hurt their ability to achieve their goals. But like I said earlier, there is no one single best approach. While for some people tying up their cash in a property may not be the right choice, for others, this is exactly the best choice. So if you haven't subscribed to my channel yet, now it's time to do so, because you don't want to miss the video where we talk about the reasons why people choose to buy in New York City and own their home. It should be ready soon. Alright, back to this video. The next reason why people choose to rent instead of buying comes down to flexibility. If your job requires you to move frequently, or if you're not sure about living in a particular location long term, then renting in this case most of the time is a better option. All you need to do is give a notice of vacate to your landlord in a timely manner, and you can move out after your lease expires. Even if you're in a tough situation and need to move out before your lease end date, you can also discuss the lease break options with your landlord and come to a mutual agreement. If you're a homeowner and need to sell your home shortly after you bought it, you'll most likely lose a significant amount of money. Since as a buyer you've already spent so much money on the closing costs, now you'll be responsible for the closing costs as a seller, which includes your broker's commission, transfer taxes, building fees, flip taxes if applicable, and so on. And if the market at the time of you selling your home goes down, you might not even be able to sell it for the same price you bought it. Flexibility also comes in handy if you think your current living situation will require you to upsize or downsize anytime soon. Again, with renting, it's as simple as signing a new lease somewhere else and moving to your new home with a fraction of the cost of buying. I know you might be thinking now, I can just rent out my home and still be able to move to somewhere else if needed. And sure, that's an option, but not always possible, because co-ops have sublet policies, which again can vary from building to building. There are co-ops in the city that allow sublets from day one of your purchase, but mostly you'll see sublet policies allowing you to rent out your unit after certain years of ownership, usually 2 or 3 years. I've also seen some buildings that allow sublets after 5 years of ownership, and there are co-ops in the city that don't allow sublets at all. But besides that initial occupancy period, the majority of co-ops have limitations on how many years you're allowed to sublet. I have a full dedicated video on co-op sublets, so feel free to watch that as well. But besides the limitations, buildings also have sublet fees. And this is the case for a lot of condos as well, which are extra payments that you have to pay to your building if you decide to rent out your unit. With condos, most of the time you are free to rent out your unit anytime, but it's not uncommon to face cash flow problems where the rent you're getting isn't covering your carrying costs, which creates an unfavorable situation for you as a homeowner. And lastly, not everyone can be a landlord or wants to be a landlord. It's not as simple as laying on the beach and collecting rent payments without doing anything. So to summarize this point, New York City is a very dynamic city, and a lot of people here prefer to have the flexibility to easily move wherever they want, whether it's a job-related move, upsizing or downsizing, or just simply exploring new neighborhoods. The fourth reason is not dealing with maintenance and repairs. When the appliances break, the roof or the facade of the building needs work, or the boiler needs a maintenance, as a renter, you typically don't deal with any of that stuff. Every once in a while, condo and co-op buildings require additional funds for capital improvement projects or emergency repairs, and the owners of every apartment need to fork over money to fund those projects. It's called assessments, and it's on top of their already existing carrying costs. I also have a dedicated video explaining assessments. If you don't believe me, here it is. You can watch it, it's linked in the description below. And if you buy a single family or multifamily house, then all the maintenance and repairs are your responsibility. Those were 4 main reasons I wanted to talk to you about in this video. Once again, it's very important to seek personalized advice for your specific situation before making any big financial decision. The goal of this video was to give you a general understanding of the situation and point out certain factors to think about. Don't forget to schedule your free one-on-one consultation call with me using the link in the description below, so we can talk about your specific situation if you're looking to buy, sell, or rent here in New York City, or if you just have any questions about New York City real estate. If you watch this video till the end, don't forget to like the video and subscribe to the channel because it's free and takes a split second to do so. And I'll see you in the next video. Thanks for watching.